Here we go. All right, good morning, everybody, and welcome to our November webinar. Thank you so much for attending. We are very, very fortunate this morning to have, as Mike called it, one of his friends. He's definitely one of our friends online this morning to chat to us about one of our favorite subjects, insurance. It was a very well-anticipated session this morning, and we received quite a few queries beforehand, which I filtered through to Mike, and Mike confirmed that he would be chatting about. So before we get going, there's a couple of housekeeping issues. Firstly, if there is going to be background noise on your side, please do remember to mute yourself. If you would like to ask a question, pop up your hand and I'll acknowledge you. Alternatively, pop your question into the chat function. When we're done, we'll open it all up and everyone can chat again like they did in the beginning. We're going to keep strictly to our timelines this morning because we're going to be joining WIST at 11 o'clock for a very interesting topic there this morning. So for those of you that would like to listen to this again, and for those of you that know people that weren't able to attend this morning, the session is recorded and the recording will be made available on our website. I will post a link to our website on the chat function that you can have easy access to it. For those of you that don't know, we do have a blog as well as our video recordings on our website. You're more than welcome to go and check it out and sign up for our newsletter. There is a little bit of a sign up sheet that you can join, which is a new addition to our website. Just for your diaries, on the 9th of December at 10 o'clock, we'll be holding our December webinar, which is going to be a bit of an early one, but we are closing a little bit earlier this week as well. And that session is going to be a Q&A session. So start getting your questions ready. We'll be answering it live. Absolutely any topic that you'd like to discuss, even if it's outside the scheme of community schemes, we're happy to have a bit of a chat on it. For those of you that weren't able to join our most recent invitation on the estate living webinar, there were a couple of interesting things that came out in regard to the community schemes ombud service, and I've posted a couple of requests on the various social media forums on Facebook and LinkedIn. So if you would like to comment on those, either go and have a look for them. Alternatively, let me know and I'll point you in the right direction. All right, without further ado, I'd like to hand over to Mike.
Right. Okay, good morning, everybody. Zelinda, thank you so much for inviting us to do the presentation this morning. Oh, there's some background noise there. There we go. So really great to be here this morning again. And Zelinda, yes, always super to work with you, and great to see our friends, many of my friends here this morning. Makes me feel very comfortable on the one hand. On the other hand, many of you have heard me drone on about valuations over the many years. But don't worry, I am going to do a slight difference. I'm going to drill down into different areas that we normally do, because more recently, as Zelinda has picked up and as I've noticed, there's slightly different things coming out in these modern times. You know, things have got more sophisticated, and valuers are all doing things slightly differently. And I have picked up that there are certain things that portfolio managers particularly and trustees should perhaps look out for. Okay, so it's really a lookout. And then I thought, well, I could just go through the lookout things, but best we go through, do a little bit of basics, and then as we go through, we will pick up the things to look out for, and then I'll summarize it at the end. Zelinda has had two queries and asked me to deal with them this morning, but I will deal with them at the end. The one is a question about fidelity, which we'll deal with. It's a very quick question. And then the second one is regarding claims on when, which account the claim proceeds should be paid into, but we'll deal with that at the end. Okay, so as Zelinda says, without any further ado, okay, by the way, for those who don't know, although most of you here are my friends, I notice, my name is Mike Addison, and it is actually statutory for me whenever the word ADSHA is mentioned that we also mention our license number if we are expressing some sort of expressing advice in some manner or other, or even advertising. So our FSP number, our license number, in other words, is 15269, just for the record. Okay, so as I said, we're going to just go through the valuation in a basic sort of way, first of all, for those of you who are not familiar. And then as we go through, we'll look out for certain things. Okay, so also, please bear in mind, it is a little bit of a high level go through. When I say high level, I don't mean, rocket science. I'm talking about going through things without much depth, because for that we would need at least 3 or 4 hours. But we're just going to touch on some of the basics. I'm looking at it more from a portfolio's point of view this morning, or a managing agent's point of view, but in so doing also for trustees, because it is stuff that trustees we would like to disseminate through to the trustees. Okay, so building rates, first of all. And I also want to express one thing as well. I'm not a valuer. It's just that I do work with valuations. And over the many years, we have learned how to see valuations through the eyes of an insurance broker. So it's just looking at it from our side, in other words, what we want. Some of the comments I will make is no bad reflection on any valuer. And, in some cases, I rather compliment than point. But we as brokers do need certain information to remove the risk from the client's point of view. Okay, so building rates, first of all, to understand that, what is a building rate in terms of valuing a building? Well, you get different forms of rating or valuing a building. So in this case, in this morning's case, we're looking at the replacement cost value. So we're looking at, always remember, when we're looking at a building replacement, we're treating the building as if it was completely destroyed. So you have a building standing on an earth or a plot, and we're looking at a complete destruction of a building. So, the building is there, and then suddenly some event removes the building, turns it into rubble. So what's left has got to be completely removed and a new building put in its place. So that's the figure that we're trying to determine this morning. So the rate includes the costs of the building services. In other words, the air conditioning, the ceilings, the electrical, and all of those things that are part of the building, but excludes site infrastructure, development, parking, or any future escalation, loss of interest. Now, I'm just talking about building rates here. I'm not talking about what we're insuring. So when we're looking at a building, we're going to just treat it as one square building of 100 square meters for purposes of this exercise. All of the civils and that are not included in the building rate usually. Okay, it can be, but then the valuer will usually point out what his building rate includes or excludes. Okay, but important, it definitely excludes professional fees, value-added tax, and of course demolition costs, which aren't in this definition. Okay, so when we're looking at a building from a sectional titles point of view, I don't have to tell anybody here this morning, we're looking at from the median line. So if you look across the building, we're looking from the top down here, your median line in the middle of the wall, obviously middle of the ceiling and middle of the floor as well, but we're going from middle of the wall to middle of the wall. So when you look at your PQ schedule and the square meters shown there, it's a measurement across the red lines. Okay, so if you're 100 square meters on your PQ, you can imagine that you have 10 square meters of internal wall measured. Zelinda will agree with me. She can nod if she disagrees, or I mean shake her head if she disagrees. Okay, so what we have here is sort of almost 3 measurements. And I see if you go and look on Google and you get different building definitions, I do that from time to time just to try and keep up with trends. I see that some definitions of a floor, they call it the carpet area. Now, the carpet area on some refer to the internal walls. Okay, so the area that would normally be carpeted and would probably exclude if you had a lift duct in the middle or something. But let's just say this 100 square meters of building, your carpet area would be your inside area. I call it the usable floor area. Different people call them different things. And then, of course, you have your external area, which is the outside wall measurement, also called different things. I'm not going to go drilling down into that this morning. So if you had a QS or a valuer here doing a presentation, they'll probably get more technical with this. But what we just need to understand is that the PQ shows the figure from middle of the wall to middle of the wall. you know, I notice one can get quite disappointed. You decide, I'm going to check if I was ripped off when I bought this new house, and you measure the inside of the walls, and you get disappointed to see that actually in this case it's only 97.5 square meters. And you think, good grief, the developer took 3 square meters away from me somewhere, but he didn't. It's measure your PQ measures the middle. Okay, so then the valuer will come along, and you will use something like this normally, which is a wheelie thing, and you will walk around the outside of the building, and you'll see that he will measure it slightly differently, and get, you know, maybe 102 square meters for those 100 square meters. So very often the valuer's figure shown on the valuation is different to what is shown on the PQ. Most valuers actually these days, they actually just use the PQ figures because it avoids confusion. Because I get a phone call often, Mike, this valuer's got it wrong. He says it's 102 square meters. It should be 100 square meters. Obviously, the figures are bigger because we're talking about the whole building. All right. And I say to the clients always, well, if the figures are slightly different, especially if they're slightly more, that's a good thing. That proves that the valuer did actually do a measure, which I'm quite pleased about. These days, they don't necessarily use the wheel. I notice they're using the laser measuring equipment. And some of the guys, I once bought one about 5 years ago. I could never get the thing to work, so it's sitting in my man drawer. But so yeah, I suppose if I was a valuer, I'd probably still use a wheel because I don't know how to work those laser things. Okay, so what does this mean for us? Well, your 100 square meters now, and if it's being valued for R1 million, your rate per square meter is 10,000 Rand per square meter. I've conveniently rounded it to the tens, obviously, and you'll see valuations coming in these days: 9,500 Rand per square meter, 9,800 a square meter, 14,000 Rand a square meter, and different ranges, okay, depending on the building. I'll chat about that now. But very typically, your without being snobbish, your upper middle class type of townhouse, granite tops, nice flooring, in other words, nice tiling or laminate flooring perhaps, or, you know, nice ceiling, you know, not just concrete ceilings, nice ceilings and so on, better finishes in the bathroom. You're probably looking around the 10 upwards figure. 9,000 Rand, very common townhouse sort of figure still, but there's definitely a move towards 10,000. How do I gauge this? I just gauge it from the valuations that are coming in. Because of the volumes that we do, we see the valuations come in. I always note what's the square meters here, what's the square meters. I look at the photograph just to try and get an idea in my head of what's coming through. And it also differs from area to area. You know, it might cost less to replace a building that's maybe in an area which is accessible to contractors rather than in a mountain pass or somewhere around Bantry Bay, where it's more difficult to bring the trucks and deliver the goods. You would expect that to be a higher building rate per square meter. Okay, so I'm not going to labor on that any longer. So very typically, and I've looked at the AECOM book, which is a construction guide that is obtainable from the AECOM website from time to time. I do have a link for it, which if anybody really wants it, you can have it. It's a booklet published. It used to be Davis Langdon. You might remember quantity surveying firms Davis Langdon, and I understand they were bought out a good 10 years ago by AECOM, and they continued with their booklet. I think we used to call it the blue book or the green book. I used to go into their office in town, in Cape Town, and go and pick up copies of the booklet. It was a free booklet which gave you a whole lot of rates per square meter every year, and it gave you some stats and Bureau of Economic Research figures. You know, for a portfolio manager, I think it's fair to say that you can rely on your broker for this information, but it is good for you to also understand. So typically low-rise apartment, 8,000 to 11,000 Rand a square meter range, duplex economic, prestige upmarket block, middle class house, 9,000 to 12,800. So you can see where I'm getting the 10,000 Rand per square meter from. Okay, as sort of my benchmark at the moment. So this is the the simple way of looking at it, and this is typically what I've done over the years, and many of you have heard me many years ago go through this. So typically, this is a typical format that I would like to see a valuation come out in. From an insurance broker's point of view. I see Jaco is here this morning, and I'm sure he would agree with me. Jaco, great to see you this morning. Please, if you have any inputs, let me know, and I'll mention it as well this morning. First of all, we need to look at the sections. So there's your rate per square meter, which I've laboriously explained. And let's say this complex is 2,000 square meters of buildings, multiply by the 10,000 Rand per square meter, and we get our 20 million. Okay, so there's our 20 million determined. Our common property items would normally be listed. I have an example which I'll show you, and it'll show all the garages, maybe if they're common property garages, the guardhouse, the wall, the fence, the paving, and the services that were not mentioned in the rate per square meter. Now you can see why the rate per square meter does not include the services and drains and everything, because it comes under afterwards. The building itself is dealt with separately. Okay, the total building cost therefore 21 million with your common property items. I'm just using a small figure. Obviously, this is not really meaningful. We'll look at a better one just now. But just for purposes of the exercise, 21 million. Now we have to add professional fees. What are professional fees? And this is something the valuer does. I used the wrong to say we. The valuer will add, will work out what in this particular type of building, it's a high-rise building, or it's a simplex, or it's a duplex. What would this building need in terms of professionals? Some buildings will need engineers, quantity surveyors, architects, a whole list of professionals, and some will need maybe half the inputs from professionals. So one takes a percentage of the sum insured, and the valuer will apply his mind or her mind to what the professional fees would be. Typically 12%, 8%, 10%. I've just used a middle figure. Demolition costs, it can range anything from 3 to 10% in some cases, but demolition costs are put there because once the site is being destroyed, or the buildings have been destroyed on the site, you need to remove all of that rubble. You need to make the site good to do the replacement. The salvage needs to be dealt with. I always refer back to 9/11, 2001. Was a good example of how long it took to clear ground zero, they used to call it. We used to see on TV all of that rubble and those metal things sticking out of the ground. We still have images in our mind. And that's typically demolition costs, removing all of that. They say these days, and I use the word they quite glibly, but apparently valuers are looking more towards the 7% mark. Years ago, we used to look at about 4 or 5%, but I'm told by very good valuers that 7% is more the mark these days. So it can be 4%, because obviously a high-rise building's rubble would be somewhat more than a small building's rubble, and let them work out the percentages. And then of course the terrible value-added tax, which we all have got used to paying an extra 15% on everything we purchase. And that has a huge impact. If you can see 15% of the total value of all of that stuff. And your total replacement cost is therefore 28.4 million. So be careful. That's the first thing to always look out for. I often see people make the mistake, not so much these days, but in the olden days. When I say the olden days, a good 20 years ago, people used to just take 10,000 Rand a square meter. Well, in those days, a lot less, but 10,000 multiplied by your 2,000, and they would actually insure for 20 million. And there would be a good 30% underinsured because they didn't take into account these items. In fact, I used to suggest to managing agents, if you remember, some of you did the old paddocks courses in the old days. They're still doing them, but I mean, I know that some of you did them many years ago. I used to speak about doing this calculation on the back of a cigarette box, just checking to see what your policy looks like. You can actually do that. You can actually look at a policy that you've just taken over, and you see the sum insured, you know what the square meters are and the PQ, you take 10,000 a square meter, multiply it out, add maybe 5% for common property, or even 10% for common property to be conservative, add 10% for professional fees, add 7% demolition, add 15%, see what you get. Okay, that figure comes out at 28 million. Goodness me, we're only insured for 20 million. We better call the local valuer in quickly to do a valuation. Okay, so I used to call that the back of the cigarette box estimation. And then we've got the escalations, which I'm not going to go into too much detail now. I'm going to just tell you about it, and then I'm going to go into more detail in a further slide. So the escalation is one of the big areas I want to, in fact, you could say the centerpiece of the what to look out for is around escalations this morning. So escalation is your period of insurance, the first part. So in insurance definition, and the valuers out there generally come to the party in terms of describing it like this, because escalations can be pre-tender, post-tender, and have all sorts of technical names. But I try and keep the focus on, for sectional title, we look at this. Escalation for the period of insurance. Okay, so that's you could say we insure today for 28 million, but the insurance policy will then run for a year, and we need to account for inflation for that year. And the second part of the escalation is period of redesign and reconstruction. Okay, and I'm going to go into more detail on that, as I said. Okay, but firstly, I just want to look at a typical valuation, and this is quite a nice one. I quite like this one. Quite a good example. I was having a peek at it because I've kept this it was from a previous bit of workshopping we did. I think Monique will remember this one. Monique, you're here this morning, I see. So this is a Cape Town valuation, as far as I can remember. I'm not going to mention any valuers' names this morning. I've got a lot of positive things to say about different companies, but I thought, oh, I'll be fair this morning and won't mention valuers by name when I say name of company. But I think David did this one. I think David in Cape Town did this one, but I won't mention his surname, you see. And it's very positive. So what I like here, you can see the format, 9,500 Rand a square meter. So it must be a pretty recent one. It was this year, I think, and 2008 square meters. Interestingly enough, you'll see just now that actually the PQ is actually a little bit more. So he might have missed something, but anyway, be that as it may, his wheel maybe got stuck somewhere around the corner. But anyway, he's got 2008 square meters, which proves he did use a wheel. And then common property. Now, the common property in the last example I just showed you was a one-line item, but you can see we actually want description of what they're doing. So in this case, and this is the first point, I like the valuer to understand the garages or the exclusive use areas, because then it makes our life easier. Because most valuers will just say 10 garages. Now, we don't know. Are they common property garages? Are they exclusive use? Well, ordinary common property garages. Are they exclusive use area common property garages? Or are they sections? Now, obviously, we can pick that up from the plans, etc. But it's nice if the valuer has taken the trouble to set it out. So this valuer is quite experienced, and he has set out EUA garages and listed each one. Okay, and you can see, for example, even right down to the fact that garage number 14 is 18 square meters. So let's take note of that. That one's a little bit more. And then the paving and the common property buildings, exit stormwater drainage, etc., electric fence, plastered and painted walling. And we get an idea of what's going on. And one of the things we like to ask the valuer to look out for is any retaining walls. Quite important. A retaining wall, especially all of those walls in the Sea Point, Clifton, Bantry Bay area, all of those walls that are tiered up at the back, usually of the complex, or in Durban, I know in the Berea area, quite a lot of retaining walls. Serena, I think you've probably got a few of those, you know, Johannesburg, you know, in some of the hilly or more hilly parts on the West Rand, I see a lot of retaining walls. Jaco, you're probably familiar with a lot of retaining walls. Retaining walls are not automatically insured for storm, so just understand that. So in fact, it's an exclusion on most policies, 99 of policies, and if they are included, it's conditional about, it's saying that you've got all sorts of engineers reports already. So I don't believe that those are really properly insured anyway. So if you want a retaining wall covered, which could be a huge component of the common property, then the valuer better put a value on it, identify it, put a valuation on it, and then we can take that further. Okay. So I think it's pretty important that a valuer finds retaining walls. They can miss them, but I think it's a good point. Then swimming pools also in exclusive use areas. Some valuers, and I'm not going to criticize or compliment particularly here, just understand that some valuers within their services will go and look for those exclusive use area swimming pools, and some of them won't. Okay. There's pros and cons, and there's arguments for and arguments against, but it depends on what service your valuer offers. If he doesn't offer the services of finding the swimming pools and EUAs, then ask him to, and he may then adjust his fees, of course, because he has to do a little bit more work. Work might involve just looking on the plans, making a few phone calls, and doing a Google search or something just to try and look from above where you can find the pools. But the problem is valuers don't have access to exclusive use areas. And I mean, I had one last night, in fact, where a body corporate client of ours, a good client, I'm very familiar with the common property, and they've added 2 swimming pool in exclusive use areas. And it's ridiculously low cost. I mean, a swimming pool, even of 100,000 Rand, that's only an extra 10 Rand per month. So, I do believe that they are automatically covered, under the policy anyway, but I always think it's safer to have it noted on the policy that there's a swimming pool here and there. Okay, so difficult for the valuer to go and find them sometimes, because some EUAs are walled off. EUA gardens are walled off with tall, high walls and hedges, and around the corner at the back, and you can't always access them. The valuer just gets let in by the security guard sometimes, and really can't find those things necessarily. So it might be an idea even to say Section 6 and Section 7 have got exclusive use swimming pools. Mr. Valuer, can you mind having a go and have a peek there? We'll make sure that the EUA garden area door is unlocked for you on that particular day. All right, so look out for those. And then here's the same format, professional fees, demolition costs, and so on. And then your escalation. Now here, just take note, we might come back to it. I'm watching the time, so don't worry, we're going to move through pretty quickly. We've got your escalation figures here at the bottom. So your total sum insured of 29.3 million, 29.3, escalation during the period of insurance, and a period of reconstruction. I usually put period of reconstruction and redesign of 2.9. Okay, and this is quite nicely set out. This particular value sets it out rather nicely. He says insurance for 12 months, and he divides the inflation rate for the year by 12, so it's 0.80% per month in this case, and he comes to a figure. Pre-contract escalation, in other words, the redesign period, he's saying it's going to take 5 months to clear the plot, get the place re-engineered, and the architect draws new plans and so forth. You might not build exactly the same thing. Ground Zero in New York is that good example. They didn't build those 2 square towers in its place. They built something else. So you might change the design of the building and use the money to improve the situation. So in this case, he says 5 months is needed. And then after 5 months, the reconstruction commences. Okay. So just quickly, I'm not even going to go here this morning. So I'm just talking about some of the things to look for on the valuation. But normally, as you know, I then do half the presentation on the valuation, and then on how and all the quirks around the schedule of replacement value. All I want to tell you, because it is something to look out for, is never, ever, ever, ever use the copy of the policies PQ schedule. Always create your own schedule of replacement values. Rule 23 point something tells you that you have to anyway before every annual general meeting. It doesn't say in rule 23 point whatever, go and photocopy something from the old policy. It says you must prepare a schedule of replacement values, and it's right next to the rule that says that you've got to do a valuation every 3 years. So that schedule has got to be prepared. In other words, you must take the valuation and then transfer the information and work it out. Now, over the years, the old rules used to say, the old rules, remember 29 point whatever, I can't remember anymore, but the old rules before the new rules came in under the Sectional Title Schemes Management Act, the old rules used to say the trustee shall prepare such thing. Okay, so I always do harp on the fact that the trustee shall, therefore the managing agent should. The new rules actually said something to the effect that the body corporate must prepare. Probably better worded, the body corporate must prepare. And Clive Reynolds this morning, who's here, we had a discussion about this about a year ago, and I agree with Clive fully that the broker should actually assist in this process rather than the body corporate. So your insurance broker should. Now, we can't dictate what a broker's job is because it's not really defined here, but we certainly do it. So ADSHA, for every single body corporate client that we have, you send us the schedule of the valuation, and then we prepare the schedule, and we keep that as a live document in our system. And then whenever an AGM comes up, you just call us and we just update it quickly. But during the year, we're actually updating it with additional sums and endorsements and things, and the adjustments we make. But you can see we summarize what's here, we bring it across more or less, and at the end 29.4 matches, and then each unit sum. Another thing to look out for, big mistake, I see it all the time on just about every policy we take over. You see where he's got the common property items of 2.6 million. A lot of insurance policies are structured incorrectly. They split it, they put the 2.6 million, particularly on CIA policies, you'll see at the bottom, they've got common property 2.6, and then all the sections listed above with the sums insured. Well, that's wrong because you're not accounting for the unit sum insured. That common property needs to be in a column rather, as a part of the PQ, and then showed as a unit sum total. So always be careful when you move from here to here that you actually are doing it correctly. In other words, you're accounting for the stuff correctly in this sort of format. Okay, I'm not going to spend another half an hour going through, but just a point to consider. Okay, then what happens is, well, it's always happening, but inflation takes its toll. There's a few inflation figures when it comes to buildings. I usually use the Bureau of Economic Research, which we call the BER figures. I used to subscribe. I don't subscribe anymore. It got too ridiculously expensive. I was happy to pay 1,800 Rand a year to get 4 sheets of paper a year every quarter. But it's got much more expensive. So now I phone our valuation friends for figures when I need them occasionally. But AECOM have got figures which they publish. Now, bear in mind that these are also quite broad figures because these are the annualized figures, whereas the BER quarterly report, it changes every quarter, quarter to quarter, month to month, and so on. But your rough inflation figures, the BER figures are based on contract prices from tenders. Okay, so it's all the QSs feed in their data to the Bureau of Economic Research, and they use in other words, tender prices as their basis of working this out. There's another called the CPAP, I think it's called, and there they look at labor costs and material costs. And I usually find that the inflation rates usually track on both. Just last year or this year, in other words, 2020 to 21, obviously it was a bit different. There weren't so many tenders. COVID-19 has certainly had an impact on the trends. And so you couldn't, you can see it's a little bit of a dip there in 2021. I would put that to COVID-19 because your CPAP for this year was about 6%. And you'll see that CPAP and BER usually track. So I've just used BER, but just going to mention that 2021, I wouldn't use 0.4. I would maybe use 4% or maybe even 5 or 6%. Okay, so it gives you an idea. 2019 to 2020, you could say 4.3 and 3.4. So, you've roughly had an 8% increase over 2 years, over 3 years, 8 and 7, 15%. Now, bear in mind that the insurance company will default increase your valuation, your sum insured by 10% every year by default, but you can just tell them, listen, we know that things are tracking at about 6%, rather just increase by 6%. I know that some of you guys work with me and we do look at it. I'm not too worried about the smaller buildings, the 20 million rand buildings. I call it a small building, no disrespect, but it doesn't really affect the 10 or 20 million rand building, 10% or 6%, because it's still subjective. But when you come into a 200 million rand building, or heaven forbid, a billion rand building, 2 billion rand building, then these figures are more important, and you should in fact do the valuation more regularly and more carefully. Okay, so just an explanation quickly on the escalation. And you can, we're going to make these slides available so you've got these pictures to look at. Very typically December 2021 to November 22, you've got your year of insurance. An event happens here in the 31st, 11 months during the insurance year. You have the whole building the earthquake destroys the whole building, so we're insured. So you'll see there that we're insured for 28.4 million. So the payout date on the 31st of October is 28.4 million. But it happened during the year, and it happened, as you can see, 11/12 during the year. So, what happens is, even though your valuation is done on the 1st of December, and the insurance policy, we're just going to say, started on the same day, inflation is still taking place. In 11 months' time, which is now, when it happens, obviously, a price of cement and the price of bricks and the price of steel particularly has gone up, and that's accounted for. So in other words, even though the valuation was done 11 months ago, 28.4, the insurance company are going to give us 11/12 extra of 2,558, and they're going to give us 2.3 extra to account for the inflation. Now the redesign period kicks in. Can you see here? It's not straight after each other, the redesign period. This valuer said that it's going to take 5 months. So this will probably go to about May or June next year. And it's allowed for that period. And then it's going to take a further, maybe 2 years or so or a year or and a half or whatever, a year to get to, or 18 months. It depends on the building, on how long it's going to take to construct. The building could take 6 months if it's a little house, could take a year if it's a bigger thing, or if it's a block of flats, it could take 2 years to rebuild. And I believe that a valuer should take a view. I'm not qualified, you're not qualified to take a view on how long it's going to take. And you can see that this particular valuer that I showed you the example of has taken a view, 2.5 and 5.1. You see, your period of redesign and construction can be double because it's a 2-year period. Can you see? It's a 2-year period that we're accounting for, 9 and 9%. Okay. I could spend a good 20 minutes on this, but time keeps us limited. So just know that that's important. Okay, so the other thing to look out for is the format, and I'm not going to labor on this. Monique, you remember we did go through this particular example before. You'll see that quantity surveyors format and some valuers formats are both correct, but they come out with different answers. They come out with the same answers, but it's perceived to be different answers. Now look here, exactly the same building, same figures used, everything. Replacement cost 36.3 million, and here replacement cost 31.7 million. Goodness me, we can be 5 million rand out. Not so. It's just that the QS type of format is done with the flows, and your escalations are included in your replacement cost. Okay, whereas I say we need it for insurance. We structure the policy with the escalation stripped out after the replacement cost. That's the only difference. So you've got to be very careful. That's why I say I agree with Clive that the broker should do this. Rather send the valuation to the broker and let the broker make the mistake, because there's a 15% difference here. And say the premium was 50,000 Rand per month, and for 12 months, you paid extra. I think I got my figures wrong there, but let's just say there was a 90,000 Rand error because you paid 90,000 Rand in premiums too much because of, by using the inflated figure, the incorrect figure, and it's picked up by some clever owner at an AGM or something. Whoever did it is going to be responsible. And remember, most managing agents, not most, but many, use the template contract of NAMA, which says that you guys are going to arrange the insurance. Well, if you've done this, I believe the managing agent can be very easily called upon to repay 90,000 Rand to the body corporate. It can happen quickly. I've seen it, and believe me, it gets ugly and very embarrassing. Get the broker to help you. Okay, so in a nutshell, summary then, rate per square meter, worth amounts rather than rate per square meter at AGMs. You now understand it. I have seen big mistakes. You go to an AGM, I'm not there, maybe just the trustees are there, maybe your managing agent, portfolio manager's there just to take minutes. You're not interfering in the meeting, and they very unwisely decide. They look at the rate per square meter, they use the wrong figure, they don't use the correct rate per square meter, they read it wrong, and I get an instruction the next morning, please reduce insurance from 12,000 Rand a square meter to 8,000 Rand a square meter. Goodness me. Then what happens is you can't, the AGM is gone, and that's what they've agreed to. And now you're underinsured by 30%. So never use or term the 10,000 Rand when you're instructing. Always look at the figures, the Rand figures. It's a much better idea. Okay. Square meter measured by the valuer will always be slightly different. Always bear that in mind if it's done properly. But sometimes the valuer will just, for ease of, people not phoning and complaining, he just sometimes adjusts it to the figures that are shown on the PQ. Escalation figures are important, as you can see. We need them to be there. Identify types of garages, sections, EUAs, or common property. Identify retaining walls, swimming pools, and EUA gardens, please, if they can. Solar systems, if there are solar systems on the roof, try and identify them. I'm not necessarily, haven't been to the building for 3 years or so I won't know that it's there, and then we could have a problem if I'm not told. Solar systems, thatch wooden structures, of course, even a little wooden shed, just tell us about it. We just note it on the policy. And watch out for the layout, the valuation. Send the valuation to the broker to structure. Okay. Some valuers provide annual interim figures. One in particular, I think that's very good. They give you interim figures, but careful not to treat this that's the valuation. If you're getting your second interim valuation from your valuer, it doesn't mean that you don't need to do a valuation for another 3 years. It means that next year it's actually due. Okay, just bear that in mind. A full valuation gets done. You have interim ones, but actually you've got to go back to the full valuation for your 3-year period. Some valuers will check exclusive use areas and swimming pools more carefully than others. Some valuers will physically measure and look out for extensions. Some valuers do escalation figures correctly. I wouldn't say correctly, but I would say in the right format. Okay. Some valuers include escalations in total replacement values. And of course, some valuers make mistakes. In fact, all valuers make mistakes. Show me a valuer that never makes a mistake. Insurance brokers make mistakes, portfolio managers make mistakes, owners, trustees, we all make mistakes. We're human. So just look out. Nobody's doing a bad job if there's a mistake. I tend to pick them up more often than not because we are working on spreadsheet templates. So when the figures come across, sometimes they don't quite add up. And then we chat to the valuer, oh, thank you for picking that up. And then they adjust the figures. So do a little check. Everybody can make a mistake. All right, so that's really it. And I'm going to just quickly, because I know we've got the WIST coming up, deal with the 2 questions. The one question is fidelity. And there was a question from one of Zelinda's clients, where, and I'm going to actually unstop the sharing now, and we can all look at each other better. One of the questions was around fidelity. Zelinda, if I remember correctly, the clients went to their broker. The broker said, no, the maximum they can do for fidelity is 2 million rand. And they're stuck. They need more than 2 million rands fidelity cover. Well, I find that strange because you can do a lot more. The biggest one we've got is 32 or 34 million. I can't remember. I think it was 32, and I think this year it's 34 million. And it's actually even over the limit. So CIA and CRB are my favorite two for fidelity cover for bodies corporate and HIAs at this present time. CIA's limit, I think, is 30 million, and I think to CRB's is 20 million. Could be the other way around. Jaco will probably confirm. Jaco, you agree? I think CIA is 30 million and CRB 20 million max that they can do on fidelity.
I think you're definitely correct with 30 million on CIA. I'm not 100% sure about CRB, but 20 million sounds about right.
Okay. I just so happen to have the 34 million with CRB because they can then go to their reinsurers and ask for more, etc. Okay, so I would say 30 million is probably, and usually a very big, large, wealthy body corporate if you've got 30 million rand in the bank account. But it can be. I was actually a trustee once where we had 10 million because we were building up reserves for lift complete refurb, and so there could be a good reason to have a lot of money floating around. But it's it's not the norm, and then maybe one should deviate from even the formula because really we're not we're looking at it more carefully. Okay, so yes, that answers that. You can get a lot more than 2 million cover, no problem. The second question, and by the way, I've got and I'm not advertising here per se, otherwise I'd put the link up, but we've got a little YouTube channel, and one of the links in our YouTube channel is an explainer, for 10-minute explainer on how to work out your fidelity. And it's quite a handy little link because instead of trying to do it in a blog or something, and if you feel particularly lazy, you can click on it and little quick explainer, and I'll go through it with you if you want 10 minutes and you want to understand how to read it on the balance sheet and how to read it on the thing. Okay, then the second question was, and it's actually a common question, and it comes up regularly. It came up in Paddock's Club the other day, and I just can't remember the rules, so we're going to quickly look it up in Shirley's book. Where is it? So easy to look this up, huh? In Shirley's book. Okay, so the rule, it's rule 24, rule 24.3, yeah, 3B, 24.3B. It says that any amounts received under insurance policy in respect of damage or destruction of the property for which the body corporate is responsible. That's what you're supposed to use the admin fund for. The following amounts must be paid into the reserve fund. Following the rule 3 says the following amounts must be paid into the reserve fund, A, B, C, D, blah, blah, blah. But included in there, any amounts received. So in other words, what it's saying is when a claim proceeds are paid by the insurer to the body corporate, the money must be paid into the reserve fund. That's what it says. But nobody does it. Well, nobody that I know does it because it's actually dangerous. I've actually pointed this out to CSOS. Last week we had a meeting with the CSOS people. We went through some of the insurance legislation and rules and little quirks. And this is one of them that we discussed. You can't because you can, but it's such a fag and it's so dangerous from a risk point of view because the insurance company have got it loaded in their system, the debit order and the bank details of the body corporate, which ordinarily comes from the current account or call it the administrative account. So the money is coming in automatically. It's all nicely, firmly, securely in the computer, and now a claim gets paid out. It makes absolute sense for the insurance company to pay it straight into that same account. because it's secure. They know the account number. We all know it. Safe. Nobody has to give them an account number. There's no emails. And if you change the account number, obviously the insurance company are going to start asking for proof of banking. You're going to have to get bank account details, and you're going to fill in forms and all sorts of things. And then there's still a risk of fraud, because somebody is going to try and hack. And believe me, they tried to hack CIA the other day even. Okay, so luckily it was picked up. So the hackers are out there. They're trying to get those insurance claim monies. Okay, so let's rather not deviate. The premium paying account where the debit order comes from, let the money go into that account, even if it's breaking the rule. Or if you feel terribly guilty about breaking the rule, change the rule, because it's a rule, you can change it. Okay, so that's my thinking. After all, we do break some other rules. Show me one managing agent or one body corporate in the whole country that complies with Rule 31. That's your Giza rule. Because if you're complying with Giza Rule 31, well then, if you're insuring Gizas, then you better be changing that rule. Okay, so, you know, some of the rules are a little bit silly. You know, we're still dealing with 2016, you know, I call them, you know, the beta version of the rules. We haven't fixed them yet. Okay, so just bear that in mind. I would definitely pay into the premium paying account. If you're being a very good trustee and you're now deviating from that, you're actually putting the body corporate at risk, so rather don't. Okay, question 2 answered, done and dusted.
Fantastic. Thank you so much, Mike. We've got 3 minutes.
Okay.
I see that Caroline had her hand up and then she posted her question. She says, is an annual escalation compulsory to implement? And then number 2, what are the obligations of the managing agent broker regarding providing annual renewal letters and proposals? I know that's a firm favorite of yours. And number 3, is it correct that common property replacement values need to be reflected against each unit separately according to the registered PQs?
Okay, so the second question I didn't get, sorry.
The second one was, what are the obligations of the managing agent or broker regarding providing annual renewal letters and proposals?
Okay, no, 100%. Okay, good. 3 good questions. Okay, so the first one was the escalations. Okay, are they in compulsory? Is that right? If I remember correctly.
Correct.
So your building sum insured is the figure that you're using. But most policies will provide 4 escalations anyway. There's an escalation clause in the policy, and then they provide the 2 figures. And if you don't give them a figure, you would actually pay, you would have 10% and 10% automatically inserted anyway. So if you give them the figure that's inflated, then you're going to be getting an extra 10%, probably an extra 20% by default. Traditionally, there is a long answer, and I'm trying to be short because of the time. Traditionally, they used to actually charge for the escalation. It used to be half the rate for the first year, and the second figure they used to do at quarter of the rate without going into explanations and the reasoning. So you used to pay a lower rate. So it used to be good to do it. But now CIA, for example, don't even charge for their first extra 10% on both of those levels. If it goes to 20%, then they will charge you the surplus amount. Okay, so it's very cheap insurance. It's very cheap, yet very important. And I've seen it being applied. I actually used it in an argument when something was underinsured on a large 2 million rand claim. Okay, so yeah, so that's important. The second thing is record of advice. It's phase legislation. It's critical that your broker gives you annual written advice, and that's an hour's story for another day. But yes, the short answer, definitely written advice. And in fact, if you don't get written advice, if the portfolio manager does not insist on written advice, the portfolio managing agent, portfolio manager is putting the whole managing agency at risk. Okay, so that's important. I can tell you why another day. The third question, I've forgotten.
The third question is it correct that common property replacement values be reflected against each unit separately?
Absolutely. So it mustn't be a separate figure at the bottom, because you need to show on the policy, if you look at rule 23 point, I can't remember it exactly, 0.4 or something, what it says is that the unit sum totals must be shown. And a unit sum total is the common portion of the common property plus the section value. Section plus undivided share in the common property. So unit value, And you can't issue an insurance certificate, for example, for bond purposes, if the portion of common property is not included. You're understating. And in fact, you might be causing that owner to pay unnecessary extra premium. So always have the unit sum totals listed on the right-hand side.
Fantastic.
End of story.
Thank
Okay.
you. We know that WIST is happening now, so anybody that would like to head off there is more than welcome to. I think, Mike, if you don't mind, we'll just...
No, that's fine. I understand. Yeah.
With the two hands that are up, Yaku and Marion. Yaku, you can unmute yourself.
Hi, guys.
Hi,
Mike, just thank you for a well-prepared presentation, Mike. Just a quick one, if we can rewind back to that first diagram that you had with the median walls. We have an outside measurement, inside measurement, and so forth. If the valuer uses the PQ, then his figure is definitely going to be out. Let's assume the left and the right-hand side is bordered by neighbors. So you share a wall with your neighbor, you insure the one half and the neighbor insure the other half, which is 100% correct. But the front and the back wall is shared with a body corporate and the other half is common property. But that other half is not catered for in the valuation normally. I've never seen it on the valuation. So if the valuator uses the PQ values, he's going to miss that outside half of the common property wall.
No, you're 100% correct. We can, really, I call it splitting hairs in terms of that. And I'm actually not worried about 2 or 3 square meters, to be quite honest, or a few square meters, even up to 10 square meters. So generally, they somehow take account of it. Usually when I do these presentations in the old days with live, I used to always make sure there was a value at hand so he could express himself in this regard. I know that Murphin used to often be present, or David Hewitt used to often be present in Cape Town, and then I would, refer to them and wake them up if they weren't concentrating. But I'm never too worried because it's usually taken into account. Like they sometimes adjust, they either adjust the rate per square meter sometimes to account for that, or otherwise they adjust the actual square meters. And it doesn't make a huge difference on a 20 million rand building usually. Okay.
Correct, I agree with that.
I'm not too worried about it, but I think it's just worth looking at. One of the reasons I like valuers to go around with the wheel or their little gadget to measure the building is because sometimes they pick up extensions that nobody knew about. I've got one at the moment. So you have an extra 20 square meters sticking out. Oh, it's not shown on the sectional plan. Oh, it's not anywhere. Oh dear. Suddenly we've got an extension and it's picked up. And as you know, Jaco, just for everybody's sake, Jaco is a colleague. He's also, he's a broker, Cortfo Brokers, and him and I do work quite nicely together. We share many of the same ideas. I feel that that's more important, is to identify the additions that aren't stated, and let's get that on the policy. Yeah.
Thank you, Jaco. Jaco also got the green shirt memo today, apparently. Mike?
Sorry?
Jaco also got the green shirt memo today.
Oh, good.
Marion, you've got your hand up if you want to unmute yourself.
Hi, yes, thank you. Look, there are 2 questions that I did put up on the chat group. The first one I hope is a quick yes or no. Surely the swimming pools in the EUAs that Mike was talking about, those should be part of the owner's optional insurance. Surely they, if an owner's put a pool in, then the owner should pay for the chlorine in it and also pay for the insurance in it.
Can I answer?
Yeah.
Okay. All right. Marion, absolutely indirectly correct. So it's common property nonetheless, and it's part of the common property, whether it's an exclusive use area or even de facto exclusive use area. So it's common property, and the buildings need to be insured as a whole. You're actually even insuring the guy's built-in stove inside his section, for that matter. So we have to insure it. The buildings need to be insured as a whole. And that's why, and you're usually safe. If a building, if a swimming pool gets damaged, I've had this particularly in Durban, where those retaining walls break and all of the rubble falls into the swimming pool and damages the pool. Ooh, dear, ooh, I get a bit nervous because the swimming pool hasn't been stated on the policy. But usually the insurers will treat it as part of the buildings as a whole, quite honestly. But just to be safe, because one day some loss adjuster is going to get clever and he's going to say you didn't state it. So that's why we like to identify the EUA swimming pools and try and note section 5 and 4 have got a swimming pool. Okay, what you do then is you line item it, and on our schedule of replacement value type of webinars, I show this. In fact, Zelinda's been with me on an EUA presentation before where we show this particular case as samples. In those slides, we have a line item, a common property line item on that same schedule, and we call it EUA swimming pools, like in the example just now, EUA garages. And then we list those garages and we charge that 10 Rand per month to that owner on an annual basis. Normally, the managing agent prefers to do a debit advice. We give them a voucher and we say it's 120 Rand a year for that swimming pool, and the managing agent will debit the owner usually once a year or once a month on their levy statement for that. If it's an EUA contribution, bear in mind. So in other words, if you are under doing the right, following the right thing, which I notice very few people do, you've got the EUA contribution part of your levy, EUA contribution, and actually your premium should have been calculated when you formulated that EUA contribution. The swimming pool's insurance premium should have been accounted for. Okay.
Fantastic. Marion, you've got a second.
Okay, thank you. Yes, my other question is also about additional insurance for the owner's benefit. Our body corporate has had a nightmare recently in trying to recover, do the admin to recover these premiums from the owners. And one of the problems where even the managing agent has had difficulty is they say sometimes the bondholder bank organizes this direct with the insurance company without even going through the MA. So it's not that the MA misses it, but the MA doesn't even know about it. What we think would solve this problem would be if the insurance company would give us an itemized invoice every month with the body corporate portion in one line and the individual owners, which after all is a relatively small number, on separate line items. Then at least the MA would have it in front of their face of how to recover, would notice where there are changes. And the other thing I would love to see on our accounts is that the body corporate part, which of course is an expense, would go straight to the expenses and the recoverable part will go to a different line item.
You know, okay. I'm going to use the opportunity to show off here. So AdSure does that for you. Okay, so that's a broker service. Your broker should be providing what I was going to call, I'm not going to do it now, for if we had another hour, of course I would, but we provide our clients annually for the additional sums and for the EUA contribution purposes. We provide with vouchers, debit advice in PDF format. We've worked out the premium, and so that you can even attach those debit advices to your levy statements. Okay, so some of the insurers are trying to do that. You'll see on some of the CIA schedules and some of the, they've put all the list all the premiums down the side. Never use those figures. I'm not going to go into the details why, but you can't use a premium per PQ worked out sum insured, because one building might have thatch and it might be a manor house and the other buildings might be completely different. And now they've just done a PQ thing. So there's a whole lot of complications if you do that. Rather let your broker work out the premium for you and give it to you in writing. Okay, for your recovery purposes. Our system actually does it. We've got built a system to actually cater for that. I'm sure Jaco does the same. Okay, you usually find the brokers that specialize in sectional title, like Jaco and myself, will do those added extras for your clients. Okay.
All right, Mike, would you like to take one more, or shall we call it a day?
I'm happy. I'm just worried about the Wist, because I'm very loyal to Wist. I don't want to
Yes,
step on
okay.
their
Well,
toes.
let's call it a day then. What I'll do is I'll feed the questions through to you that weren't dealt with, and then we can maybe just
Okay.
contact the people directly. Fantastic.
No, 100%. Okay.
Thank you so much for your time. And for those of you that stayed behind, thank you so much. If you do want to jump onto WIS, please do so. And remember, the recording will be made available on our website. Have a fantastic day further, and we'll see you all soon.
Great.
Well,
Chat again. Bye-bye.